what happens, if anything, over this long weekend with Russia and Ukraine and what that means potentially for a Tuesday morning open. I think we all have to be open-minded about anything potentially happening there that could impact the trade next week. The Fed question, unknown, really. It's hard to know, really, for the next month until the March meeting. All we have now, a bunch of Fed speak, a hawkish Bullard yet again. What do you make of it all, and how do you navigate the market on this Friday?
Well, thanks for having me on today, Scott. I think one of the things that we're most concerned about is that there are really two time periods that we're speaking about. And I know we talk a lot about our time horizon on this show, but this very near-term period, which I'll define as the next 6 weeks or so, I think you've summed up the concerns and the risks very eloquently in terms of what the market is facing. We've got the ongoing concerns about inflation and the Fed, this storm that we're experiencing in terms of the reset of high valuation stocks. And now we have a military conflict. And so I think what many of us have been doing is going back and looking at the potential impact of, a military action, the potential impact of interest rate hikes. And we see that 12 months out, typically these, both of those scenarios result in higher prices for equities. And so the problem is that nobody cares about 12 months from now. They care about right now. And how should I be adjusting in an environment where, bonds didn't protect capital in the month of January. We aren't receiving those benefits from diversification, particularly if you're further out on the yield curve, to your point. And so how do you think about navigating? Do you take and put cash on the sidelines here? Well, cash isn't earning you anything either. And so I think one of the other things that we've been really focused on is what are the secondary derivatives of something like the Ukraine-Russia conflict? Does that potentially minimize the benefits of economic growth in Europe because they're going to be so beset with inflation coming into this year? Those are the things that when I look at the portfolio, there's areas of interest. There's a balance between cyclicals and some of the big name technology stocks. There are additional exposures in areas like small cap and international. And I have to think about all of those things because the opportunities are clearly there. But can you remain steadfast in your portfolio and navigate the next 6 weeks in order to set yourself up for a second half of the year, which I believe will be markedly different from the experience we've had thus far?
Okay, so cash may not get you, Josh, much of a return. It will, however, get you a good night's sleep because there are a lot of things to worry about. Tom Lee has a note out to try and ease some of those fears today. He said bond hawks are winning this battle but losing the war. And if you cut to the end of his commentary, we still see upside to stocks before month end. It's an interesting call given all that's on the table, Josh, in front of us and so much uncertainty. And we could say it till we're, blue in the face. I mean, the market doesn't like uncertainty. We know that. And this is a special kind of uncertainty. One is the here and now, Russia, Ukraine. The other is the, not only here, but in the weeks and months ahead. And that's the Fed. It's hard to game it all out.
Thanks, Scott. Yes, I am wearing lilac. So I think the big picture thing here that's taking place that maybe is more important than talking about any individual stock or any individual earnings reaction is the sway that options trading holds over this market. So like talking to somebody that's like a mutual fund manager and they pick their favorite 50 stocks and like what's your favorite stock right now? Like, none of that matters when you look at the notional amount of derivatives being traded against the indices and all the dealer gamma hedging and all of the market structure and positioning stuff. And so people are like, oh, what's going on with the semis today? What? It's irrelevant. We're on an options expiration day. And go back, this has been going on since 2021 and actually becoming exacerbated with every passing month. The 2 days leading into options expiration, the day of expiration, and then the following day, you're just getting these incredibly jarring moves in the market. And this is how you have a stock that gets cut in half, reports earnings, misses by a penny, and gets cut in half again. How could that be happening with $100 billion plus market cap companies? It's happening every week in this earnings season. It's really mind-blowing to watch. So the individual fundamentals of companies is not important right now. And as I've been talking about, I think this is probably the 6th week I've been saying it, we're in a bear market, we're in a correction, and it's not over yet. And the way you know it's not over is because of the daily fireworks that we're seeing in the growth areas of the market. So I think there's been this vibe shift that's gotten very defensive. I think we're kind of in this place where people are starting to prize things like near-term cash flow versus total addressable market. How long that continues, who knows? But that is the present condition of what we're going through. And that's why you see people like, oh, I think I'll take a shot on this stock. It's down 30% from its high. A week later, it's down 50% from its high. Nothing fundamentally has changed, but you're really fighting an uphill battle, even trying to pick your spots among the hardest hit names. There seems to be no floor for those stocks that were so popular a year ago. And I don't know why anybody would want to fight with that right now. I don't understand the purpose of like wading into that. It's not helping anybody.